There is a $20 billion industrial asset sitting right now on the coast of Lagos. And for the first time, ordinary Africans may be able to own a piece of it. Not hear about it, not watch it on the news, actually own it. We are talking about the Dangote Refinery, the largest single train oil refinery on the planet. And the man behind it is planning to take it public. But here's the part the business headlines keep skipping. This IPO almost did not happen. Powerful groups tried to stop it. They attacked the product. They went after the man, and they had billions of reasons to. Stay with me, because by the end of this, you will understand what is actually happening and exactly what you need to do to be in position when it does. Nigeria is the largest oil producer in the continent. For decades, it has been pumping crude out of the ground, selling it on the international market, and then buying back refined fuel at 5 times the price. The government built 4 state-owned refineries: Port Harcourt, Warri, Kaduna. Combined capacity 445,000 barrels per day. On paper, more than enough to meet domestic demand. In practice, those refineries barely worked for 40 years. Since 1999, Nigeria spent billions on what officials call turnaround maintenance. Contracts awarded, money moved. Refineries kept breaking down. Earlier this year, NNPC's own leadership reviewed the books and concluded the refineries were generating what they called monumental losses. They shut them down. Monumental losses after tens of billions spent, after 40 years. So the question that sat in the air unanswered: can anyone actually fix this? One man decided to stop waiting for an answer. In September 2013, Aliko Dangote announced he was going to build a private refinery. The initial budget around $9 billion. People called it too ambitious. Then the deadlines shifted. 2016, 2018, 2020, 2023. Total investment eventually cost $20 billion. Some estimates say $23 billion. Put into one project by one man. In May 2023, President Buhari commissioned it at an official ceremony. Diesel and jet fuel came first. By September 2024, it produced its first commercial gasoline. Then in 2026, full nameplate capacity, 650,000 barrels per day, making it the first single train refinery anywhere on the planet to reach that throughput. For government refineries, 40 years, tens of billions, zero meaningful output. One private businessman, 13 years, done. And that's exactly when the trouble started. Now let's quickly ponder on who profits when Nigeria stays dependent. Think about who was making money before the refinery existed. Every tanker of imported diesel, every cargo of refined gasoline, every liter that passed through the subsidy system. Multiple networks, traders, importers, middlemen had built entire businesses around Nigeria's ability to refine its own oil. That was not a problem for them. That was a business model. So when Dangote started producing at scale, that income stream started shrinking. And that is when the attacks began. In 2024, a dispute broke out between Dangote and Nigeria's downstream regulator. The regulators claim the refinery oil had high sulfur content, substandard, unfit for market. Lawmakers stepped in and supervised actual laboratory tests. And here's what they found. Dangote's diesel, 87.6 parts per million sulfur. Competing market sample 2, 2,000 ppm. The fuel already on Nigerian roads was 20 times dirtier than what Dangote was producing. And separately, when UK-based investigators looked into claims that Dangote had imported substandard petrol, they cleared the refinery entirely. What had been imported was standard refinery feedstock, a normal industry practice. So the substandard fuel scandal looked less like a safety issue and more like a coordinated PR campaign against a refinery that threatened a very profitable import ecosystem, which raises a question worth sitting with. If the tests cleared it, if the investigators cleared it, If the data was on Dangote's side, why was so much institutional energy put into discrediting it? The question tells you something important about the stakes here and about what happens next. Let me give you the numbers so that you understand the size of this thing. 650,000 barrels per day, current capacity. Nigeria's daily demand for gasoline, roughly 50 million liters. Diesel, about 17 million liters. This refinery can cover it all and still have 40% left over for export. And by 2028, if plants hold, a second processing line brings capacity to 1.4 million barrels per day. Not just enough for Nigeria, enough to supply the continent. Projected annual revenue from 2025 upward, around $25 billion. From one asset, one that a private citizen built because the government could not. Now, here is where the story changes for you personally. Because of all that capacity, all of that revenue is about to be something you can hold a piece of. Dangote has publicly confirmed to list the refinery on the Nigerian exchange. The NGX along Dangote Fertilizer. And the structure being discussed includes cross-listings on multiple African stock exchanges, Nairobi, possibly others across East and Southern Africa. So what that means in plain terms is that you may not need to be in Lagos to buy into this. You may be able to buy shares on an exchange in your own currency. The asset base, $20 to $23 billion. Projected annual revenue, $25 billion. Exchange officials and analysts have suggested this listing could push total NGX market capitalism above 100 trillion naira. Here's your reference point. When Dangote Cement listed in 2010, it lifted Nigeria's total market value by roughly 1/3. Almost overnight, one company, one listing. The refinery is at least 3 times the scale of that cement business. No prospectus has dropped yet. No date is confirmed. No price is set. What we have are public commitments from Dangote himself, from exchange officials, and from multiple financial analysts. So the direction is clear, but the timing is not right. So I am obviously going to be updating you guys on the details. And also, if this is something that you really love, let's say you are one of those who are taking the bulls by the horn to invest in Africa, I am going to be making another video, right, to give you those African countries that are most suitable for stock exchange, right? So if this is something that you would love me to do, just drop stock exchange in the comment section and I will do just that. And if you're new to the channel, my name is Elvin Chik, and on here I cover everything that has to do with investments in Africa, basically everything finance related. And also it might interest you to know that we have a diaper brand that we are about to launch pretty soon. And you know, on the channel we prone investment in Africa. If you are new to the channel, I would advise you go to our playlist and check on our old videos to know exactly what I am talking about right now. If this is something that interests you and you are part of those who want to take the bull by the horn and you're interested in joining this project, please do contact us at africatodayinfo@gmail.com and you will be more than welcomed to join the crew. Now back to what I was talking about concerning the Dangote shares. The direction is clear, right? But the timing is not. Which means the question right now is not whether to buy. The question is whether you even know how, because when the window opens, that is where most people get left behind. So if you are a resident in Nigeria, the process is straightforward. Here is what you need to get started. A valid ID, obviously, national ID, passport, driver's license, a voter's card, your BVN, an active Nigerian bank account, a recent utility bill, and passport photographs for KYC. Now, let me quickly walk you through the steps, right? Once you have all of those documents, the first step is to choose a licensed stockbroker. Go to the NGX website and check their trading license holder list. Well-known names with strong digital platforms: Stanbic, IBTC, Stockbrokers, Meristem, Cardinal Stone Securities, CSL Stockbrokers, and you name it. Now step 2, open a brokerage account. often done online. Submit your documents through the broker's platform. Now, step 3, your broker sets up a CSCS account for you. That is your Central Security Clearing System account, where your shares are held electronically. Think of it as your digital share wallet. Now, step 4, fund the brokerage account. Transfer Naira from your bank. When the IPO launches, you need enough for your application plus minor fees. Now, step 5, when the IPO opens, submit your application through your broker. State how many shares you want. Fund the application. Wait for allotment. And after allotment, your shares land in your CSCS account. And now trading begins on NGX. You can buy more or sell through your broker's app or dealing desk during market hours. Now, on minimums, the exact entry price and minimum application size will be on the prospectus. Many Nigerian IPOs start from tens of thousands of naira. You do not need to be wealthy to participate. But what if you are not in Nigeria? Can foreigners legally buy Nigerian stocks? Yes. For Nigerians living abroad, Nigeria introduced the non-resident BVN, that is the NRBVN. You apply online through the NIPS portal, pay around $50 and submit your passport and basic details. Once you have that, you can open a brokerage account remotely. Stanbic IBTC, CSL, Cardinal Stone, all of them actively service diaspora clients. Now, for the funding, you will just need to wire money from your foreign account to a Nigerian bank. This generates a certificate of capital importation, that is a CCI. That document is your protection, so keep it jealously. It is that document that allows you take your profit back out of the country once you want to exit. But if you are not Nigerian, that is Ghanaian, Kenyan, Cameroonian, South African, the process is similar. Engage a Nigerian broker that accepts foreign clients. Provide KYC documents, passport, proof of address, sometimes a bank reference. Arrange either a Nigerian bank account or a custodian structure through the broker. And watch for the crossing listing. If Dangote lists on Nairobi or another African exchange, you may be able to buy the same shares from your home country in your own currency without going through the Nigerian banking system at all. Now, before you start researching brokers, there are things you need to know first. Things that could cost you if you ignore them. Now, the first thing I want you to pay attention to is currency risk. Shares will likely be dominated in Naira. If the Naira weakens against your home currency, which it has done sharply in the recent years, your return in dollars, euros, or cedis may be much smaller than your Naira gains. For diaspora and foreign investors, this is not a small consideration. Now, the second thing I want you to have at the back of your mind is operational risk. Running 650,000 barrels per day is enormously complex. The refinery has already flagged difficulties getting consistent crude supply, partly due to pipeline vandalism. One major disruption, mechanical, regulatory or supply side, hits revenue directly. Now, the third factor is the political risk. The substandard fuel controversy proved that the powerful interests can use regulatory channels to create friction even when data does not support them. Policy changes, fuel pricing, capital controls, foreign participation rules. All of these can shift the investment case quickly. Now, the fourth factor is going to be the evaluation risk. A $20 billion asset price at $25 billion in projected revenue leaves almost no room for missteps. If the IPO is priced aggressively, early investors are buying future expectations, not current performance. None of this means you should not look at it, right? It simply means you go in with your eyes open, not with hype in your ears. Because here's the part that very few analysts are saying out loud. But I want to draw your attention to these go-getters because in as much as I always have your back to update you on the recent investment opportunities, at the same time, I want to make sure that you don't make certain mistakes, right? Because the aim here is to make Africa a greater place. And we can only do that by being very careful not to make the same mistakes that our forefathers made, right? You know what I'm talking about. Now, back to what I was saying. Now, I want you to know this. When Dangote lists, the obvious winners are clear. The Dangote Group monetizes a piece of a $20 billion asset. Nigerian pension funds, which have been stuck in government bonds and bank stocks, suddenly have a real industrial asset to hold. The NGX becomes relevant again in global fund managers. African retail investors get access to something they have never had before. But on the other side, every liter Dangote Refinery refines locally is one less imported cargo. The traders and importers who build entire businesses around Nigeria's dependence on foreign fuel, that income stream is contracting. The contractor ecosystem around the state refineries, NNPC, just shut those facilities down. That whole network of politically connected turnaround maintenance contracts is gone. This listing is about more than one company going public. It is about reallocating economic power from import-dependent networks that profited from Nigeria's failure to market-based capital that can be held by ordinary people, including you. And if you zoom out further, it becomes an even bigger question. One of the common arguments you hear about African development is that the continent can't finance its own industrialization. That every refinery, every port, every power plant has to be funded externally through Eurobonds, foreign banks, or outside investors. This refinery, privately financed, locally built, now listing on African exchanges, is a direct challenge to that story. If African pension funds, retail investors, sovereign wealth funds, and diaspora capital can co-own a $20 billion industrial asset through public markets and earn real returns from it, that changes what the next African infrastructure looks like. Maybe the next power plant lists on the Ghana exchange. Maybe the next Pan-African logistics company raises capital across 5 capital exchanges instead of going through London first. The Dangote IPO, if it lands well, if the governance is strong, if it is priced fairly, is either the proof of concept for that future or a mischance that sets it back years. That is the real question sitting behind all of this. Not just can you buy shares, but what kind of Africa gets built if you do? Now, go-getters, what I want you to have at the back of your mind is the fact that the people who tend to be in position when an opportunity opens are the ones who did not wait for the headline. They opened a brokerage account before the prospectus dropped. They got the non-resident BVN before the queue formed. They understood the process before the window opened. So I am not asking you whether you should invest. Only you can answer that with your own research and your own proper financial advice. I am asking something simpler. When this listing opens, will you know what to do? Because the refinery is already running and the listing is already coming. The only variable left is you. That said, thanks for watching this video, go-getters, and I would advise you share it to as many people as possible. For as I always say, the more we empower Africans, the greater Africa will be.